Okay. Hang on, let me press record on this. Okay.
In these things, I'm always conscious of where optimally to place my hands. At the front. Yeah,
There we go. To be honest, it's from the waist up anyway, so
Yeah,
feel free to move around.
That's good.
Yeah.
My hands are always a bit awkward, so.
It's all good. We good? Dr. Avtar, thank you very much for making time to talk to us. How are you? We're in Abu Dhabi Finance Week. Is it exciting?
It's good to be here. It's always sunny, so it's fantastic.
So before we get into STBL, at a very high level, I want to ask you, what does it feel like to represent the digital assets industry here, or the virtual assets industry as they call it, among so many compliance-focused, TradFi folks and institutions?
It's actually quite fantastic. I mean, considering, I've been in the industry myself now for over 10 years. And, we've always seen this transition from pure crypto, everyone's working on public chains and not talking about compliance. But as we're starting to transition now into more the regulated use cases and compliant use cases, the world is now, the regulators are catching up. But what we've seen here in the UAE, in Abu Dhabi, is like the regulators have been at the forefront for a long time. And they've been working with companies like ours, Solana, etc., from the early days. And they're trying to accelerate this kind of compliant and regulated adoption in the industry, and it's been happening at an amazing pace compared to anywhere else in the world. So, exciting place to be.
Absolutely. I mean, they call it the capital of capital, and I think for good reason as well. So, are you noticing over the years a higher appetite for talking to businesses at the intersection of traditional finance and institutions and crypto as well?
Yeah, absolutely. I mean, in the early days, it was always tough to go into a room in a regulated institution. And I used to go into a room, talk about crypto, and you were kicked out in in less than 30 seconds. Like nowadays, they invite us to talk about these things. Tokenization, RWAs, and where stablecoins are going, how can you issue compliant stablecoins? And with the framework that ADGM is developing and the UAE is driving forward overall, I think the institutions are coming here to start working with crypto and tokenization, stablecoins, etc., in a more compliant manner. So that's the advantage.
Absolutely. So let's dig into STBL. I know from my very brief research that you have sort of a three-tiered token system. Break it down for me. How do you separate the yield from the stablecoin itself, and what are some of your sort of high-level plans?
Sure. Before I actually talk about the three token system, it's probably a good idea to give you a little bit of an overview of the history of how we got here. So, the company STBL is founded by two key people. As myself, I'm essentially the day-to-day CEO, and my co-founder is Reeve Collins. He founded Tether, obviously, and so you got the guy who created stablecoins, and I, in 2013, created the first tokenized financial instruments. So, if you think about how those two industries evolved, in the early days, tokenization was very niche. It was like something that the financial industry wasn't really too interested in, but everybody was like doing tokenization here and there. Stablecoins, everybody said, this is there is a commercial use case for this at that time. So Tether sort of took off. Tokenization, we did some interesting things, like you probably saw things like the Santander bond, we did that, and some of the other ones in the industry. Pretty much all the interesting stuff on tokenization was happening. We were involved in pretty much a majority of those. And then Tether sort of kicked off and other stable coins followed suit. Now, what happened with that was, and Reeve will tell you himself, when Tether was at the beginning, they essentially used to just take $1 and give you a token. That was the business model. Now, over time, that's evolved where they take your dollar still, now they put the dollar into T-bills, but that's all off-chain. So you're still getting the token, you're still giving them the dollar, but ultimately that dollar is now giving them all the yield through the T-bills. Now, today we're seeing a huge increase in RWAs. You're seeing tokenized T-bills, you're seeing money market products, all these kinds of products are there. So if you think about it, what's stopping you, like someone like Tether or Circle, to say, rather than giving us the dollar, You plug the dollar into a smart contract, and we're going to give you a token, and that dollar essentially can purchase a T-bill. You could do that in theory. So essentially, if you do that, who gets the yield? Now, what we've done is we've said, let's create a system where people have tried to do that system where you put the dollar in, you get the token, stablecoin, but now you're going to start paying yield on it. If you do that, the first problem with that is yield-bearing stablecoins essentially are going to be considered securities. So that's been the challenge in various industries. The Genius Act in the US has said you cannot issue a stablecoin that earns yield. That's a security. Under MiCA in Europe, the same issue. We're going to start seeing across the globe compliance saying we like stablecoins, but you need to have the reserves held in somewhere. They're going to provide you instant redemption if you need it, but ultimately you can't give that yield to the minters, essentially the holders of the stablecoin.
Was that the biggest crisis that you saw in the sort of overall stablecoin landscape when you thought, we need to solve this, now that regulation's moving in the right direction,
exactly.
Now that we're in the capital of capital, was that the sort of core motivation?
That's exactly it. We said, look, how are you going to overcome this situation where you want to be able to have everything on chain, because the tokenized instruments are there, and you want to be able to give people the ability to purchase these stablecoins on chain. But now, how do you manage the yield? How do you do all that stuff? So what we said was, let's do this. We allow the party to come in, they purchase a stablecoin, but that T-bill now, or it could be any other yield-generating asset. You could take the yield-generating asset, strip the yield, and that yield is stored in like an NFT account. So if you are the person that's doing the minting, let's say you got $1 million, you purchase $1 million worth of T-bills. You plug them in here on chain, you now get an NFT that's going to give you the yield on that, but then you're also going to get a token, the million, it'll be like over collateralized, so you get about $98 million worth of stable coins.
And that bypasses some of the regulatory hurdles that we've seen in the past under Gary Gensler's highly combative SEC regime?
Exactly, because what you've now got is a stable coin that's over collateralized, that's instantly redeemable for the underlying if you need it. But ultimately what you can do is that even if you transfer that stable coin to someone else, you're not going to be transferring the yield. I, as the minter, can still keep that. So in a way, what we say is that you can keep the yield and spend the stable coin. And that's the board that anyone can become a tether or a circle. That's the board we're going towards.
So we're sort of moving back towards the original ethos of crypto, of decentralization, of disintermediation, of democratizing access in general.
That's exactly excellent way of framing it. This is actually the true decentralization of stablecoins, because ultimately anyone can become a tether, anyone can become a circle, and ultimately this becomes ecosystem-specific stablecoins. For example, on Solana, we're going to be launching a solution for anyone to create an ecosystem-specific stablecoin. If you're running an ecosystem and you need high throughput, low latency money for your ecosystem, this is going to be the place to come.
Okay, this is fascinating, and I do want to dig into that a little bit deeper. I know you've spoken about white label stablecoin solutions in the past. One of the main issues in Solana at the moment is this discussion around stablecoin value leakage. We have a huge reliance on Circle's USDC, even though when you zoom out and you look at crypto in general, USDT by Tether is obviously dominating market. I think they have about 65% market share at the moment. So specific to Solana, I think between 80 and 90% reliance on Circle at the moment. However, people are a little bit afraid of the stablecoin value leakage. Some reports came out saying that up to $450 million per year is quote unquote being extracted from the Solana ecosystem. And I think people are also a little bit frustrated by this because some of those funds are being used to fund Base, which is in some senses a competitor. So talk to me about that white label stablecoin solution. What's in the pipeline?
Sure, I mean, I'll use an example, like, the popular one that everybody talks about so far is what happened on Hyperliquid. Yeah. So Hyperliquid was they saw that, okay, there's like quite a large amount of collateral sitting there, USDC and Tether. How can we take advantage of that and prevent this value leakage? Because what's stopping people like Circle just taking it out and going elsewhere? I mean, ultimately, this is the problem that we're solving for, and this is why Hyperliquid launched the USDH with various supporting parties, because ultimately what you can do is create an ecosystem-specific stablecoin, and we coined that terminology because there was nothing similar in the market. Everybody was saying stablecoin, but that's not the right way of positioning it. This is an ecosystem-specific stablecoin, because ultimately the participants in Hyperliquid, for example, are saying you're going to use these services, you deposit your T-bills, you can actually generate a stablecoin. We want to do that in one of the largest ecosystems out there, like Solana. So for example, on Solana, there's people now, DeFi is increasing, all these kinds of token solutions are increasing, meme coins, everything. There's an economy forming right now. Why do you want to use money that can go in other places? Why not create the money that stays on Solana? And ultimately the best way to do that is to start introducing RWAs on the chain. That same RWAs is used to print the ecosystem-specific stablecoins as well. That way, you're developing the entire ecosystem and the infrastructure. You're increasing RWA usage, you're increasing the production, the development of stablecoins, and those stablecoins are then used for payment across the ecosystem itself.
Super exciting to see, and I'm sure we'll be keeping in touch with you specific to how STBL is going to sort of grow in the Solana ecosystem. I want to focus on where we are right now, Abu Dhabi Finance Week. In your sort of estimation, having spoken to a lot of these TradFi folks and institutions here, is there a growing interest in stablecoins in general? I think from the outside looking into the industry, there's been a lot of talk this year that stablecoins are generally crypto's killer use case, but you mentioned RWAs there, you mentioned some of the other use cases. So is the general consensus here among the men in suits that stablecoins are the killer use case of crypto generally? And do you see that as something that's going to continue into 2026? Or might we see other use cases proliferate as well?
Yeah, I mean, look, I think fundamentally the foundation of all of this that's going to drive the uptake of everything else and development of crypto to become the mainstream is the tokenization of the money supply itself. And the only way that can happen is through this ecosystem-specific stablecoins. Because the one thing I don't think that's going to easily take off is a single stablecoin owning the entire market. However, people will be more flexible and open to say, you know what, if that ecosystem at Amazon or Walmart or any other ecosystem has its own stablecoin, if they can have their own stablecoin, in about 5 years' time, the total supply of stablecoins through these ecosystems is going to be far higher than any single stablecoin by itself. So what I think is going to happen is ultimately these ecosystem-specific stablecoins are going to be the thin end of the wedge in terms of how the market's going to start adopting these stablecoins. In the future, you're going to be paying for things on Amazon or in Walmart or something like that, and you're not going to know that underneath it's an ecosystem-specific stablecoin. Now, underneath that, to do the minting and management of the treasury are going to be RWAs. So as you start increasing the stablecoin supply, you're going to start increasing the supply of RWAs, and that's going to drive uptake of the entire financial markets going on-chain. And Solana is the perfect player in that area because ultimately, as I was saying before, the Genius Act is driving the usage of this kind of 3-token system. And the key here is you want an infrastructure that is high throughput and low latency. You can make payments with very low cost very quickly. Solana is the perfect infrastructure for that.
Couldn't agree more. Now let's talk about yield. When you think about the proliferation of DATs, digital asset treasuries, DATCOs, and ETFs over the last 24 months as well, a lot of focus has been on Solana's competition or the competitive edge that Solana has in the sense that it can offer staking yield to investors as well. Do you see staking yield and the potential of staking yield as being something that excites the TradFi investors here?
Absolutely. I think staking yields are going to be a value add for DATs. We have saw the MSCI announcement that there could be a possibility of excluding DATs from indices. And this has been part of the precursor that led to some of the volatility in the market on October the 10th. And I wrote an article on this in CoinDesk. Now, if the announcement comes out in January that this will be enforced, that DATs will be excluded from indices, there will be some issues, but this will change in terms of how DATs can operate, not just like a fund structure, but they can operate as a company. And the one way to act as a company is to say, look, we're not going to put, yes, we can put some of our assets into these digital assets, and we're going to start now generating yield with staking, etc. But now, if you've got an ecosystem as vibrant as Solana, you can now take some of that cash, turn it into stablecoins, and find other value-generating opportunities on that chain. And this is where the true advantage is going to come from, running these kinds of debts. It's not about going all in on the digital asset that's used for consensus, but it's about how do you drive the uptake of the ecosystem using the debt as well.
Excellent. So, at a very high level, we've spoken about STBL, your plans. We've spoken about the sort of edge that Solana has, and the problems that can be solved. We've spoken about yield and how it's attractive to all these folks in suits. Talk to me about 2026. What are you going to be working on? What are the key milestones that you're working towards?
So this year has been all about getting the core infrastructure out. We've been launching the minting mechanism where you can plug your T-bills or money markets in, and then you can generate the yield token, you can generate the stablecoin, and the value that accrues in the network goes into the STBL token. So that's what we've been developing, and we've done some very advanced R&D. We're going to be launching what I call the stabilization Tri-Factor. That's about pegging the dollar to the stablecoin, so ultimately it stays at the dollar. We're also, the Tri-Factor is the pegging mechanism, plus the liquidity support from a few partners we're going to be announcing, and plus the instant redemption of the stablecoin. So technically you'll be able to redeem your stablecoin instantly from the RWAs without owning the yield token. So these are the key things we're launching this year. Next year what you're going to see is the usage of this infrastructure to launch EESSs. So we're going to be working with a few companies and a few ecosystems. Solana is going to be one of them, where people can actually launch ESSs on these infrastructures. And this is going to be very important for anyone that wants to launch an ecosystem-specific stablecoin that is Genius compliant. So for example, compliant under the US regime for stablecoins. And that's going to be, I think, the drive over the next year.
Excellent. So where can people watching this go and follow along with the developments, the updates of STBL? Where should they go? Is it your personal account they should follow? Is it your co-founder? Is it STBL's X? Where should we go?
So I think there's 3 key accounts where everybody will get some interesting alpha. That's my account, Reeve Collins is a Twitter account, and then also the STBL official account as well. Those are the 3 X accounts which are the ones to follow. But also, if you really want to get into the nuts and bolts of everything, the Discord channel is where some of the exciting discussions happen, unfiltered.
Perfect. Thank you so much for making time to talk to us. I really appreciate it, and hopefully see you around Breakpoint as well.
Thank you. Yes, see you there.
Thank you.